Okay. Hello, everyone. This is Francine. How are you guys doing this evening?
Good
We're
evening.
good.
I'm okay. How you doing, Miss Francine? How you doing?
Good.
Fantastic.
Good evening, good
Fantastic.
evening.
Awesome. Awesome. I
Doing
have
great.
some great information for you guys this evening. So just bear with me here so I can share my screen with y'all. And if y'all can just let me know if you can see the screen.
Yes.
Awesome, awesome. So tonight, our meeting is in regards to being strategic and, you know, finding the right products. And as I call it, I kind of grew up, I'm like the end of the baby boomers. So I was around when McDonald's basically started. And one thing that a lot of us in sales, because that's who we are we are called loan consultants because we provide a solution for all of our business clients. At the same time, we are Sequoia itself, we are brokers. What sets us apart from the banks, also from a mortgage banker, as they call it, is the fact that we have access to hundreds and hundreds of lenders. That would mean wholesale lenders, correspondent lenders, private money lenders, and also the non-QM lenders. And if anyone has been in this industry for a while, they do understand what non-qualified mortgage is. That's someone who has had some type of event in their lifetime, like a bankruptcy, a foreclosure, that type of thing, that will normally prevent them from receiving, you know, a loan, if you will. They generally have to wait. Fannie and Freddie's guideline is like 2 years or so. So with that, with a non-QM lender, we can basically, as long as they show ATR ability to repay that debt, for instance, maybe they have $1 million or something like that in their 401k investment plans or something like that. That right there shows us they can repay like a 300,000, 500,000 debt, if you will, in regards to real estate. So with that, we want to be strategic when we talk to our clients in regards to our business funding. And one of those ways, in order to do that, of course, is, I'm sorry?
It's more about the people than the money. Becky had a very selfless side to her too.
Katrina, can you? Yeah, put them on mute. Thank you. Appreciate that. So hold on a second. Our agenda today is what is a business line of credit. A lot of you guys are aware of a business line of credit. If any of you have those credit cards in your wallet, that's almost a personal line of credit, if you will. There is a limit on it. The other thing we're going to discuss is the types of business lines of credit and why a BLOC business line of credit, the benefits of a BLOC, and then there's some restricted industries that this particular product will not fit within, if you will. And we'll go over some of those. Now, in regards to this introduction here, now at Sequoia Lending, we understand that running a business requires steady cash flow to seize opportunities, expand operations, and overcome unexpected challenges. That's why we're thrilled to present our business line of credit, a flexible financial solution designed to empower your growth and ensure your success. Our business line of credit is a revolving facility that provides your client's company basically with access to a predetermined amount of funds, which you can draw from whenever the need arises, whether you need to cover short-term expenses, manage seasonal fluctuations, invest in new equipment, or seize a business opportunity. For instance, right now there's a lot of foreclosures going on. And since we are in the business of CRE, commercial real estate, you want to be able to take advantage, of those opportunities at a great discount. And also our line of credit is here to support you guys. So it's basically another product in your arsenal that businesses, every single business, should have a line of credit. Now let's discover what is a business line of credit, or what we call a BLOC. Now, a BLOC can be used to borrow cash on an as-needed basis instead of, for instance, taking out a fixed loan amount, if you will. If you take out a fixed loan amount, when you think about it, once that money is spent, it's gone. It's gone. What's beautiful about the business line of credit is that you can use that as a revolving, it acts like revolving credit card, line of credit, if you will. Whatever you use, as soon as you pay it back, that amount is available again. Now, it does have a draw period, okay? With the business lines of credit, the draw periods can be as short as 6 months, or they can go up to 2 years, okay? Now, with that in mind, for business owners, there is something also that we call a secured line of credit. And those are attractive simply because they want a higher maximum credit limit. For instance, we have a client right now that's interested in a $1 million line of credit. With that $1 million line of credit, we would, some of our lenders would take collateral. What type of collateral? Well, it could be their investments, for instance, any stocks, bonds, anything like that. Also equipment, anything that there's quite a bit of equity on. And of course, if they own the building, that they work in, and there is equity there, to cover whatever that line of credit is, we can also use that as collateral, which is actually really nice for the larger companies, if you will. And right now, I know that a lot of us are operating with the small businesses, but keep in mind, the more that you learn in regards to this industry, you can approach the larger companies as well and offer a business line of credit. Because we do have, I'm constantly getting more lenders on board that will offer, the higher limits, if you will. Now, as far as the payout, I want to touch on that really quickly. As far as the payout in regards to the line of credit, for you as a loan consultant, basically how that works is each time the customer takes a draw, for instance, let's say his line of credit limit is $500,000. The first draw that he may make, it could be $100,000 that he draws. And maybe something's going on within the company, or they may want to take advantage of some type of opportunity to help the company scale, if you will. With that happening, and they've already drawn 100,000, for instance, you would be paid on that immediately. Each time he makes a draw, he or she makes a draw from the line of credit, you will be paid. Then as they repay what they've drawn out, they are releasing that line again. They're opening it back up to continue to draw, whether they're on a 6-month term, or they're on, let's say, a 2-year or 1-year term. So they can draw up to 6 months, anywhere from 6 months to 2 years, depending on who the lender is and what their criteria and their terms are in regards to the line of credit. Now, the interest rates on a business line of credit, they're lower than the working capital. So this is why this is something that you should offer every single one of your clients. One thing that a lot of the companies look at, of course, they look at the FICO score. You know, there are some companies that will offer a business line of credit for a FICO score of 600. It may not be the amounts that they would like to have, but I mean, having a few $1,000s on a business line of credit for a small business, if they're just beginning their business venture, that's still good to have, because that's something that they have, you know, cash available to them, you know, in their arsenal in the event there's an emergency or what have you. Now, how they draw from that line of credit, most of the companies give them, you know, like basically a credit card. It looks a lot like a credit card, but that card, when it's used, is basically drawing the funds directly from their line of credit, whatever amounts are available. Now let's take a look at the types of lines of credit. As you all already know, there's a personal line of credit. There's the business and also the home equity lines of credit. Now, opening the personal usually, as you know, requires a credit history of no defaults. They don't want to see any late charges in regards to that, simply because this line of credit is unsecured. It's the higher limits, remember, that are secured lines of credit. So with that, a credit score can be 670 or higher. With a 670 or higher, your interest rates, of course, are going to be a lot lower. But keep in mind, as I said earlier, we're bringing on clients that are okay with a 600 score. Now, with the personal lines of credit, those are frequently used by those with an irregular income. And they use it for travel, entertainment, as well as emergency events, et cetera, et cetera. And the home equity, as you know, people draw against those and use those for so many various items. But the focus here is on a business line of credit. With that business line of credit, what that business is looking to do is possibly, you know, grow their business, you know, if you will. Take advantage of a lot of opportunities. And right now, one thing that a lot of our businesses are looking at, and I don't know, I know some of you guys are aware because it's already been shared with you, but right now, we're looking at, for the next 2.5, 3 years, we're looking at refinancing in this industry, refinancing commercial real estate businesses loans at a rate of $1.9 trillion. With that being said, $1.9 trillion, that's low-hanging fruit for you to put together some type of marketing plan and then go after those companies whose loans right now, every single month for the next 2.5, 3 years, their loans will be ballooning. So they're looking to refinance that debt. And if you don't think that you can make $1 million easy this year, even though we have 6 months left in this year, guess what? You can, because that is the low-hanging fruit. So that's something that you want to definitely take a look at. Talk to any and everybody in regards to, you know, where they are with their loans. You know, are they at the balloon status, if you will? Okay. And again, here are some of the benefits of a business line of credit. One of them is to grow your business, take advantage of opportunities. you've heard the word scaling the business, and that's bringing on other products and services in order to make more money. I know that one of the LCs here has a customer that's heavily into the Airbnb arena, if you will. With them being in that Airbnb arena, the first time that we spoke with that client, we found out several things, that they did not have a business line of credit. And that's one thing we absolutely sold to them. And they were definitely on board with that because they were looking at ways to scale their business. Another thing that we talked about in regards to scaling with the Airbnb, typically that's business to consumer. But we also talked to that business about, business to business in the Airbnb area. There's so many clients, larger businesses, and I was one of those people with Chase. Chase sent us to Florida one
Keep
year.
talking to him about this friggin' light. He won't hear enough. Like we're getting
I'm
it.
sorry. Can you, Katrina, can you? Thank you. So with the Airbnb, one thing that we discussed with them is for them to, think about bringing on business clients that are in certain areas, for training, or they're going there to that area in order to, work for a while, because that's definitely one thing that I've done, in my past. So I know that's a big thing. And they hadn't thought about that. And they're like, yeah, that's true. We can start doing that. So, scaling is important. And by having a business line of credit, that's one way to help your business scale. Then the other thing with a business line of credit, you definitely want to have that because you want to protect your personal finances. You would rather have the business line of credit in the business name versus in your personal name. And then that way you are protected. Okay. And then again, one of the other benefits is to keep cash available. You have a business line of credit that's open, you can always reach into that line of credit and draw cash out at any ATM. You can walk into any bank with your card or checks and, draw money out. So you always have access to cash. Also, you get to maintain your independence for your business as well by having a business line of credit, which is awesome. And there's, as I said, we're constantly bringing on more businesses that offer direct lenders that offer the business line of credit product. So sorry about that. There was one other thing that I did want to go over with the group. So if y'all, have any questions, we're going to start opening that part up because there's still so much more to talk to you guys about in regards to that business line of credit. But there are several industries that are restricted in regards to having a business line of credit. Katrina, if there's any way that you can open up the mics for everyone.
Yeah, for sure.
Okay, cool.
Yes, I can.
So one thing that I would like to know with you guys, hold on a second, let me open up my screen so I can see everyone. So with the business line of credit, how do you think you're paid? We kind of went over there. So how do you think that you're paid with a business line of credit?
By the draws.
Right. And by the draws. And with that, by the draws, you guys do realize that Alan still has everyone on the 46 basis points?
Yes.
Okay, so Sultan, you're good. Thank you for that. So I'm going to ask you this in regards to that, the draws. Let's say, for instance, someone draws $100,000 and we are gathering, or we're receiving as a company 2 points on that draw. And with you as the loan consultant, you delivered that solution to your client. How much will you be paid on that first draw of 100,000 at 46 basis points?
Okay, hold on
I'm sorry?
one second.
So
So it's 20,000, so I know commission is 20,000, so based on that, we could take 40% from that.
okay, so you were kind of breaking up there. So I'll walk everyone through it real quickly. Go ahead.
Okay, sorry, I was driving.
Okay, no, that's fine. That's fine. So for instance, $100,000, what you're gonna do, if we're charging 2 points on that, typically on 100,000, we would charge a little bit more, but if we were charging 2 points on $100,000, so it would be the 100,000 times the 2%, what that amount is, and then that amount that you're receiving times the 46 basis points. That's going to get you your total payout on that particular draw. But each time that client draws from that line of credit, whatever amount it is, that's basically the calculation that's going to be made in order for you to figure out what you would be paid on that business line of credit.
So I have a question. It was indicated that the payout is based on each customer's draw. So if they draw the 100,000 and let's say they draw another 50,000 in 2 or 3 months, who actually keeps track of that?
Well, we definitely are going to keep track of it because each time that draw happens, the company, the direct lender that we partnered with,
Yes.
they have that information within their computer that the broker is Sequoia. So automatically that payment is going to be sent out to Sequoia. Once Sequoia receives it, then from there, that's when the back office will do the calculation and then pay you guys out.
Okay, so they notify, Sequoia would notify Bridgeway?
Bridgeway?
Oh, sorry,
No,
So that's-
Gina,
Yes.
they will not notify the Bridgeway. That's the one I have to talk to my boss about that too. Then actually they will notify. I will talk to Aaron about that.
okay,
So-
sorry.
No, that's fine, because I'm like, we have quite a few lenders that Alan and I were on the computer the other day bringing on. So every lender is going to be a little bit different, but keep in mind though,
Right.
each time that we sign up with a lender, we're signing a contract with them. So
Okay,
each time we sign up with the lender, and let's just say we put an application in to purchase a building for the company, and it doesn't close until 2 weeks or a month later. When that happens, they see within their computer system whose deal that is. So they know, at title, at closing, where those funds will be wired or where to FedEx the cashier's check to.
okay.
Did I
Thank
answer? I answered your question then.
So far, yes.
Iba for Ferdinand.
So Francine, basically every 100,000, we would get $920.
Yeah. If we're charging 2 points, that is
Right.
correct. If we're charging 2 points, because keep in mind, every lender is going to be a little bit different. So if we're charging 2 points, the back office will know whatever lender is submitted to, what that payout amount is.
Perfect.
What percentage will be paid out. Brian, did you have a question as well?
No, that was me that just asked that question.
Oh, sorry. Thank you for that. Anyone else have a question in regards to the business line of credits thus far?
It is power.
I'm sorry. Ferdinand, did you have a question?
No, I have no question.
Okay,
I
thank you.
I do. I have a question.
Yes,
What's the
ma'am.
qualifications for applying for a business line of credit?
Well, again, the first thing that our companies look at is the credit scoring. The higher the credit score, the lower the interest rate will be.
Okay.
So, and also in regards to the interest, typically a lot of companies, they go with whatever prime is, and that's as of the Wall Street Journal, the 30th of the month or the end of the month, the prior month. So for instance, today is May 31st, and let's just say we're already in June. And we apply for, our customers apply for that business line of credit, they're approved, and they make their first draw in June. So wherever Wall Street Journal closed in May, this month, at the end of the month, wherever they closed at, that is going to be what prime is. Then they add up what we call a margin to prime. That margin is based on your FICO scoring. Okay.
Mhm.
So let's just say Wall Street Journal closes this month at 2 points. So that would be prime, which is 2 plus, and then you have someone with a score of 700, and let's say we add 1 point to that. So it would be 3%. That would be the interest rate for the client.
Okay.
I have a question. My name is
Yes.
Travis Williams. I would like to know, does that work with new LLCs? How long do you have to have your LLC?
Well, we do have someone already on board, and they require a minimum of 6 months. But we're also talking to other, companies, direct lenders that, have opened that door up, and they're okay with a brand new business, But then the requirements as far as you being approved are a little stricter in regards to that, because you haven't set a history of, making that payment on time, that sort of thing.
Okay.
So what the first thing that you want to look at, because that's one thing that I do, I always, ask my clients, what do you think your mid credit score is? And a lot of them say, well, I know what my experience score is, or I know what my TransUnion score is, or my Equifax score, and you get an idea of where they're at, because someone that's in the 700s, it would be really, really hard for if they're in the 700s on Experian, but on the other two areas, I doubt that it's much lower than that. The other thing too, I want you guys to know with this business line of credit, this is also a product that a lot of our lenders will pull a soft pull, which will not affect their credit scoring at all. Because as you know, each time that you pull credit on someone, that score will go down. Whether it's 2 points or 5 points, it will go down. The other thing too, I want you guys to be aware of is utilization. And you probably heard that with your credit card companies. So your utilization on a business line of credit, you can definitely max your credit line out. Absolutely. Just, like with a credit card, if you max out your credit card, your utilization is extremely high. On a credit card, they say your utilization should be no more than 33%. I personally feel like the utilization on a credit card should be a lot less than 33. I wouldn't, when I talk to my clients, I would ask them about that if they had business credit cards as well. And in order to protect their credit scores, I just wouldn't go anywhere above 25% utilization. Because you have a lot of people with $10,000 credit limits, and they have like 6 cards in their pocket and stuff. And that's one way, even though they make their payments on time, but it shows that they have a heavy utilization rate. That's going to lower their credit score quite a bit. Just so you guys are aware. Did you have another question, Travis?
No, you answered my question. Thanks, because I was asking because I just got my LLC last week. And I
Oh,
was hoping
congratulations.
I'm trying to get my business off the ground, but I got to wait a couple of months.
Oh, and a couple of months go by pretty quick. So congratulations on that, because of the amount of money that you're going to be making right now.
Exactly. Took the words out of my mouth. I'm going to have my own line of credit.
But you know what though, Travis, you definitely don't want that. For instance, let's do this. So on a commercial real estate deal, the average commercial real estate amount is right around $10 million. If you're out there hitting the streets, as I call it, talking to businesses, or dialing for dollars is another way, or vernacular I use, if you will, in regards to this business. And you get someone on the line and you find out they own their building, and they want to buy another building and that type of thing, and they're spending 10 million and more. So on 10 million, me personally, as a transaction manager, I typically will charge on $10 million. I'll charge 2 points on that, because guess what? That puts us in an arena that we are the lowest charging broker, because all of the other brokers on the outside are charging 3 points or even 4 points on something like that. But charging 2 points on, $10 million, and then you receiving your 46 basis points off of our 2 points, that's $92,000 for you.
How do I charge the 2 points? What part do I put my 2 points in on the deal?
No, it's right now, what's happening, Sequoia, Alan, myself, we're the ones that's making that decision on the pricing. We're the ones that's making the decision on the pricing as far as how many points we will be charging. But I'm just saying, typically, a commercial real estate deal is $10 million. I charge 2 points on that. That's what I charge, for Sequoia, for the company, 2 points. Out of that 2 points, you will receive 46 basis points. That's almost 50% of the 2. Okay, that's one way to look at it. It's 46% of 2 points. 46% of 2 points on $10 million is $92,000 that you'll be making. And
Whoa.
That would be a travesty to put $92,000 in your personal account, because you can only imagine how much you'll be taxed at. So it's best for everybody in Sequoia to have a business entity like an LLC. That's the best way to do it. Because
So you saying put my commissions in my LLC bank account?
Yes, absolutely.
Oh,
Absolutely.
okay, thank you. I'm gonna set up now because I don't want to. I know other people got questions, but I'm just excited. Thank you.
You're welcome. You're welcome.
Hey, this is Kevin with Southern Homebrew. On that note, so I'm a loan consultant, not a broker or licensed broker at all. Back to kind of if I'm getting leads and people interested in business line of credit or any of the other products, is there kind of any suggestions with regards to whether to charge a consulting type fee on top of the basis points, or is it better practice to make it up on the back end and not charge an upfront consulting fee?
So the answer to that, in order to stay competitive in the market, you don't want to charge, you really don't want to charge an upfront fee. You just, that's not something that you want to do.
That
You
was
want-
my take. I just, was
Yeah.
curious what your experience and knowledge base, is from that standpoint.
Right, right. Because I've had a couple of clients. I know we had one client, their whole deal was going to be 300 million. And he had brokers telling him that they were going to charge him 3 to 4 points on $300 million.
Jeez.
That's crazy. On 300 million, that's when your points will drop.
I was just thinking like $500 or $1,000. I wasn't even, thinking from a percentage point on, especially on something of that size or magnitude. But, deals of that nature, make it up on the back end once you close the deal based on the numbers,
Right, right. Now, are you more of a consultant as well? Meaning with your business, are you known as a consultant where
Yeah, so
you can?
Yeah, for me, I've been with Sequoia for about 2 months, I believe.
Okay.
Give or take a few weeks, but with that, more of a loan consultant and not as much as a broker, and I guess taking the next step within the Sequoia system to handle the docs and so forth. I usually get the leads and the contacts and then pass them over to Sequoia to do the rest of the details.
So I want you guys to know that day is coming where you're gonna learn a lot more. You're gonna learn about pricing. There's just so much that Alan is doing to really put us on the map, where we are going to be one of the preferred brokers for everyone to go to. And I mean, being in this business as long as I've been in this business, you want to be competitive because there are so many people out there that's basically overcharging, because they can on the commercial side, whereas on the owner occ side, there's so many laws in place to prevent that from happening. But with a lot of clients finding out that we're not charging outrageous fees, there's gonna be more people coming our way. And I do want you guys to keep in mind about that $1.9 trillion right now that's on the table. It's up for grabs. Whoever wants to get out there and work and find out what companies' loans are ballooning this month or in June now. Once you get out there and find that out, one of the products that can possibly be offered on a building is the DSCR. They just have to, make sure that they meet that debt ratio. And you'll easily in the next 6 months at the end of the year end up with $1 million or more.
Hello, I have a question.
Oh, one last question for.
This is Solomon Bramlett from Chicago.
Oh, hi, Solomon. Okay, hi.
Okay, okay. I'm new in this business and I don't really know much about commercial loans. And I just heard you say we have to have an LLC. So in Chicago, when I go downtown to the place where they handles the LLCs, what do I need to bring with me to show them that I'm a consultant with this company? Or do I just take them on my website on my phone?
Well, now keep in mind, I didn't say you had to. I said it would be smart to because of the amount of money that crosses the table. And I want you guys to get out and get a piece of that $1.9 trillion. I want you guys to get out and get a part of that.
Can I give that guy my email address? So I have information I can help him with, but I don't want to say it and keep the call going. This is Travis. I'm going to type my email in the chat. And anybody who needs help with opening up business bank accounts, getting LLCs and EIN numbers, I'm a business coach and that's my field and I can show you.
That's awesome, Travis. Thank you for that.
Thank you very much. Appreciate that.
Could I ask a question, please?
Yes. Solomon, did I answer your question?
Yes, you did. Thank you very
Okay,
much.
thank you so much.
Yeah, this is Catherine.
Hi, Catherine.
Hi, the question I have is for the business line of credit. For the secured loan, you require collateral. Would you describe what a collateral would be? And then the other question I have is, could we get more details on that 1.9 trillion
Sure.
guideline?
And in regards to the collateral, and again, this is for anyone that's interested in any way from either 500,000 all the way up to $1 million. Most of the direct lenders will definitely ask for collateral for that. Collateral can be anything from your investments. Your investments can be a Roth IRA, your investments can be, it can be that you already own like 10 different homes with quite a bit of equity within those homes, So, it can be equipment, the heavy type of equipment, whether you're construction or, just anything of value. But most of those lenders will let you know this is the type of collateral that we're looking for, because everyone's going to be just a little bit different. But it's going to be, any type of collateral that has value, like real estate.
Okay, great. A
yeah.
follow-up question on that. If you have cash, could you cash become collateral?
Yes, ma'am.
Okay.
Certainly can.
Okay, let's say you have $30,000. How much can you get an unsecured line of credit for that?
Now you're asking me to be the lender, and every lender is just a little bit different. I can tell you some lenders are looking for, in regards to your income flow for your business. Some of them say they want you to have a minimum of $3,000 income flow every single month or higher. Some want you to have 10,000. Some want you to have 25,000.
Okay.
25,000 so far is the highest that I've seen that they want to see coming into the business. Now, as far as that $1.9 trillion that's on the table right now, that is businesses all over the United States that have a real estate type product, they have, when they signed their documents a couple of years back, they said, okay, on this date in this month, your loan will balloon, meaning you've been paying interest for the last 2 years or 3 years, however your term is set up with that lender. Now your loans are ballooning. So on this date, you have to pay off the original loan amount, because at that point you weren't paying principal, you were simply paying interest on your loan. So you're going to find yourself looking at a $10 million refinance, a $5 million refinance. Who wouldn't want $92,000 on a $10 million refinance?
Okay.
That's pretty darn good. $5 million refinance, what you're looking at, 46,000, right?
Mm-hmm.
$46,000. So that's not a bad payout at all. So as you can see with those types of refis coming through right now, and that's in every single market. Right now, the number one markets are California, number one, Florida, number two, Texas, number three, New York, number four, and number five, I always mix this one up. Number five, I think, is Illinois, and then Georgia's number six. So in all of those markets right now, all across the United States and every 50 states, there are businesses that have their CREs, commercial real estate, that will be ballooning, and they want to reach someone, like anywhere from 2 months to 30 days before their balloon expires.
Mm-hmm.
They want to have a new loan in place.
That's very good.
So no, yeah, that's critical right now. 1.9 trillion, that's a ton of money, you know? So you can see how easy it is for every single one of us to, at a minimum, make $1 million in the next 6 months, at a minimum.
What
Hey,
would you, what
Yes,
would
sir.
you coin the
Oh.
name for this fund, the 1.9? What kind of, what bucket would you call that?
When you say what bucket, are
The
you looking for?
1.9, what would you call that type of loan? Just a refinance loan?
It's a, yeah,
Almost
it's a,
refinance?
it is a refinance now. It can be, and if, you know, if they have some equity, it can be a refinance cash out, or it can be a refinance, what we call rate and term. The other thing it can be is a DSCR. If it's a rental, it can be a DSCR cash out or a DSCR rate and term.
Okay. One last question on the block, the BLOC. Is the application done online, or is the application done by phone, or is it face to face? How do you get the applicant?
So we have a couple of different ways. Keep in mind, every lender is going to be a little bit different. A lot of them have the online application. Some will send you the digital link for, you know, so you're basically filling out, you know, they send it to the link to you and you're filling it out. That's one way as well.
Okay.
And some of the lenders, you give them a call. You can give them a call, and some do it a couple of different ways.
Okay.
So yeah.
Hey,
Thank you.
Francine,
Yes.
based on the 1.9, is there a general source in each of these states that you can, you know, find out which companies are coming due for the balloon, or is it just plain old marketing tactics?
Actually, there is a way to find out what companies, you know, are. Do me a favor here. If you can, hold on a second, because I have to figure out how do I open this all the way up. So here, let me stop sharing this screen. There. So I'm going to put my email address. I'll type that in for you. And then if you can just respond to me.
Sure.
And hold on. Let's see. Let's open this all the way up. I don't see all my choices here. Oh, here we are. Okay. So yeah, if you can just send me an email, and there is a company that I'm going to refer you to, and they can actually put that list together for you.
That'd be great. And you DM me, or where's your email?
Right there. FrancineLacey@gmail.com.
Can you share that with all of us, please?
Yes, ma'am.
I'm not seeing it, Francine.
Hold on.
Is it in the chat? Maybe.
Listed, Francine?
Yes.
I said, where is it listed?
Hold on a second. Let me type it back in again. Oops. So it's FrancineLacey@gmail.com. Let me know if you guys got it.
Yes.
Oh, awesome.
Francine, I have a question.
Yes, ma'am.
So if I go for a business line of credit, I'm approved for $1 million. Will I be required to start making payments on $1 million, or only what I draw on?
Oh, only on what you draw.
Okay, just want to make sure. Okay.
Yep. And
Thank
as soon
you.
as oh, absolutely. And as soon as you pay that off, that opens your line back up again. And you can
Perfect.
continually keep a running tab going if you want, or you can just pay off each time that you draw, and then
Okay.
open your full line back up. Absolutely. You're welcome.
Gotcha. Thank you.
You're welcome.
Francine, I got one question to ask you.
Yes.
As talking about this business line of credit, I was working with a gentleman who has a property that's worth about $300,000. and he only owed 10,000 on it, but his credit score was 580 because he was trying to do he got high debt to income ratio, so he trying to do a refi cash out, pay that down. So can I approach him and tell him, take the property, since it's paid off free and clear at a $10,000 HELOC, well, it was 80,000, he paid back 70, so he owed 10 on it. Can he quit claim the deed into his LLC and then turn around and use that property as a business line of credit, since he has a lot of equity on it and he only has $10,000 in the property worth, say it's almost 300,000. Will they give him a line of credit? And it's a rental property, so it has the cash flow coming in.
So I have a question for you to answer that question. What I would do, number one, anyone that's in this space, the CRE space, whether you're an investor, you know, all of your properties that you purchase, number one, I'm going to start from the top, okay? Because I have a family, so I'm going to start from the top. And you can open this at any time. You should have everything in a trust. Everything in a trust. And there's particular types of trust, because the trust will become the owner of those assets, if you will, okay? But not everyone can do that right away. So when you're purchasing property, the most real estate investors, they put their properties within an LLC. Absolutely. That's where they go. But what's interesting about that is they don't put every single property in the same LLC. What they do is they create, for instance, if the address for one of the properties that they own was 123 Main Street, there would be an LLC for that. If the next property is 350 Arapahoe, there's an LLC for that. But there's a holding company as well. You can have your holding company that has all of your entities. And then from the holding company, once you get to that point where you have quite a bit of assets, you want to maintain everything within your trust. So what I would do with that client, I would definitely make that suggestion. And once again, refer them over to either, it's best to go to a real estate attorney, okay? Refer them to a real estate attorney for something like that. The other thing is for them to have a CPA as well for tax purposes. And I know there's a lot of attorneys that have CPAs in their office as well. But what I would suggest for that client, if they have equity in that building, is, and if it's a rental property, if you will, what I would do is a DSCR, debt service coverage ratio. And if they want it to cash out, depending on, I do have a lender that I work with, and I've worked with them for years. And I talk to this manager, we talk almost every single day. They will do 80%. They'll do an 80% DSCR cash out. Or if they didn't want the cash out, a DSCR rate and term. That's how I would help my customer as far as being called a loan consultant. And just so y'all know, this is important too. I'm glad I remembered this. I don't know if everyone knows that Wells Fargo, they no longer have a mortgage division for owner occupants or people that are looking to purchase their homes, their 1 to 4 units, and live in them. They no longer have that division. They've shut it down. What they're doing, and this ought to tell you something about that $1.9 trillion. What Wells Fargo is doing, they have opened up their commercial real estate division. I'm getting emails all the time from them asking me to come over and become an underwriter again for them. Okay. The other company that I worked for was Chase. I was with Chase for the longest. Chase have not closed their consumer mortgage division. They have not, But guess what? They have cut the staff, and their focus is CRE, commercial real estate. So that ought to tell you, when big companies like that make a move like that, that tells you something is going on. They want a piece of that $1.9 trillion. That's what's happening in the marketplace right now, just so you guys know. But that's what I would do. I would recommend a debt service coverage ratio cash out if they have equity, and they could take it that way.
Okay.
Their equity, yeah.
Now, Francine, anywhere we could get your phone number?
You really want to call me? No, I'm kidding.
Call, text.
You know how busy I am? I mean, some people kind of get upset. But no, you can text me. It's easier for people to text me than to call, because I'm telling you, that gets kind of hard.
You said it was? How many trillion?
$1.9 trillion.
Whew.
Yeah, you want some of that?
Yes.
Yeah.
Francine, this is Robin. I have
Yes,
I have 3 quick questions.
Yes, we
Robin.
want
some of that.
Okay.
So the first question I wanted to ask you to confirm, because I didn't quite hear you clearly about the credit score check. Did you say that was a soft pull for the business line of credit?
For the business line of credit, most of our lenders, yes, they do a soft pull. There might be a few direct lenders that are so old school that they will pull what we call a tri-merge score, and that's all 3 bureaus. And it's a hard pull when that happens.
Okay, perfect.
Yeah.
And the next question is for the business line of credit, I guess for the refi for the balloon payments as well, is that all just US based?
Right now, it is US based, but guess what? I just found a lender that goes outside of the US.
Okay.
So I'm just waiting to hear back from them to get the the clearance, because I send everything to Alan for Alan to sign off on.
Okay,
So-
fantastic. Would Canada be included in that? by chance?
Canada's one of them. Yes, ma'am.
Oh, fantastic. Okay, that's exciting. Thank you. And the last question is, how quickly can we or our clients expect to see the turnaround if they do apply for and they are approved for, the business line or the refi for the balloon payments? How quickly is that turnaround?
So if depending on if it's a rental property, number one, the best route to go is a DSCR, because like I said, the company that I've worked with for years and years, I know that whole team, they can turn stuff around and have turned stuff around for me in 9 days.
Wow.
So if we can go that route, that's the route that I would go first before I would take them through the typical, underwriting, because with a DSCR is so easy. And with this company, you can either put the property in your LLC, or you can just keep it in your name and then later transfer it into your LLC. That's the beauty of working with Carlene. I love working with this group and have for years and years.
Thank you so much.
You're welcome.
Texting you tomorrow, Francine.
All right. Well, look, I'll be looking for that text from you. Paula, did you have a question?
This must be about the email.
I'm sorry, you answered it already. Let me take my hand down. I'm sorry.
Oh, okay. Let me see. I don't think I see.
I have a
any-
question.
Yes, ma'am.
Do we go to the Sequoia Lending site first to apply for the business line of credit?
Already on here talking.
Katrina, are you still with us? Katrina?
Yes, I'm here.
Okay, so do we have a business line of credit?
Yeah.
Because I know we have working capital, but to differentiate from working capital, is there a heading under business funding as a business line of credit, a BLOC?
Let me check. I don't think we have it right now, but we can add it to the website.
Okay, because we're adding on a lot more lenders for that business line of credit.
Gotcha.
Perfect.
You could go ahead, Lola. I sent it to you.
Mute your phone, please.
Okay.
Catherine, did you have a question?
No, I didn't have them. I was telling that person to mute their phone because the radio was loud. I'm sorry.
Okay, no worries. All right, you guys, it looks like we're at the top of the hour. Did anyone else have a question for me tonight?
I didn't have a question, but maybe you could reinforce or not reinforce my thought process here based on tonight's discussion. Several people are trying to set up their businesses and things of that nature, and cross helping one another is awesome. What I would suggest to those or anybody on here, don't wait to market and start formulating your strategy and for your business to be approved by your local state organization, right? For your LLC or sole proprietor, or whatever you're doing, right? Start marketing and thinking of how you're gonna, do that now, so that when you do get your LLC, you're ready to rock and roll and everything, because marketing takes time. And that's the only comment I have from my side of experience getting into this and also running 2 other businesces.
Perfect. Thank you.
I did have a question, Francine.
Yes, ma'am.
Thank you. The 1.9 trillion, where is that money coming from? What is the source of those funds?
Now keep in mind that 1.9 trillion are commercial real estate that the loans are ballooning. $1.9 trillion in commercial real estate are ballooning, meaning they need a new loan. They're going to need a new loan. That's just a small drop in the bucket, if you will, because I can go into so many other things that I know about where the possibility of getting closing more loans exist. That right now is the low hanging fruit, is the 1.9 trillion. So that's the loans, the dollar amount of loans that will be ballooning, and they need a new loan. That's what that 1.9 trillion.
I see now. Yeah, I understand. Sorry.
No worries.
Yep,
No worries.
got it now.
Okay. All right.
Thanks.
Well,
I have
thank you guys.
one more
Yes.
question. I'm sorry. This
Yeah.
Travis again. I
Hey.
came across one of my clients and they asked me some questions I couldn't answer earlier today, which a young lady asked me if I do a new loan that's a development loan, how soon is the first payment? And also is there she said a PPP payment penalty paying off early? Is there a penalty for paying a loan off early? If she paid her loan off early, is there a penalty for that?
Well, it depends on what her note says. She'll want to pull out her note. And if you are her loan consultant, ask her for a copy of her note. She'll be more than happy to pull it out and send it to you. But it will be, written within the note if there is a prepayment penalty and what that penalty is.
And would that also include when the first payment is due? Because she said something about 30 days or 90
It will,
days.
the note, yes, the note will also show when that first payment is due as well. It's going to give you the exact, date, and it's also going to tell you the amount that's due.
Okay, and that's also with the new land and development account too, right? With the note, the same thing, like if she gets some land or loan.
Oh, if she buys land,
then she developed the property is getting built. When is that? How soon is that first payment?
Again, it's going to be on her
On the
note.
note.
Yes,
Okay.
absolutely.
Thank you so much.
Oh,
I
you're
have no more
welcome.
questions. I'll catch you next time with another 5,000 questions.
Okay. Thank you for that.
I do have a question. My name is Duwanda.
Hi, Duwanda.
Hey, I want to thank you for this awesome information. I did get on late and I see it's
No.
recorded. Can we
Yes, ma'am.
access this in the back office?
Yes, ma'am. Yes, ma'am. I guess it will be on tomorrow. I don't know if Katrina or whoever handles that will, but it will be up soon in the back
But
office.
where in the back office is it?
Oh, if you go, actually, when you sign into the Sequoia Facebook, at the very top, when you bring up
Oh.
our group, it shows right there when you look at the heading, it'll show where the files are. And you just
So
click
it's
on
in
that.
Sequoia. I'm sorry, it's on the Facebook piece.
Yes, yes.
Okay. All right. Thank
Okay,
you.
you're welcome. You guys have a great evening. Thanks for joining me this evening.
Thank you. Thank you. Appreciate
Thank
you.
you. We appreciate you.
Thank
All right, thank you, Francine. Have a good night.
Thanks.
Thank you so much. Thank you. Don't forget
You're
my name,
welcome.
Thank
Travis
you,
Williams.
thank you, thank you for all your information.
You're welcome.
Appreciate you.
Yeah.
Thank you.
Here, have a great evening.
Thanks, you too.
Good evening, everybody.
Good evening.
Have a great night, everyone.
Thanks, you too.
All right, good evening.
Good evening.
Good evening.
Good evening.